Good morning, good afternoon, good evening, depending on where and when you will be seeing this video. I'm Mr. Kimbode Damilola, the lead analyst at Potential Miners International. I welcome you to today's Global Macro with the King of Waves. And today, just like our usual practice, we are going to be looking at the forex market from the global standpoint. And we are going to look at the different phases of analysis that it is expected for an average forex trader to capture for you to be able to overview the forex market from a professional standpoint. So, without wasting much of our time, we want to start with the fundamental analysis. And when we say fundamental analysis, what we usually do is to look at the summary of the economic indicator of different assets, different currencies. And at Potential Miners International, despite the fact that we know that quite a number of economic indicators might be pretty important when you are looking at the fundamental standpoint of a currency or an asset. What we usually do is to make the fundamental analysis as easy as possible for an average listener. So, and this is because you have different type of economic data, and if you really want to follow all the data, you might be confused along the line, and it will now not be profitable to you to follow those data as much as it is expected to be profitable. So to guide against unnecessary discouragement in that regard, we ensure that apart from other economic indicators that we might need to just follow on the side, we want to bring to the front the most important economic indicator when it comes to forex market, especially in the context of currencies, the major currencies of the world, and this is the interest rate. Other economic indicator that might be of concern to us will now be what we'll just follow on the side. Then we'll look at what the policy decision makers will do anytime there is a shift in any of these economic indicators. I'm talking of the inflation rate, which is very important, the employment or unemployment rate, and of course the gross domestic product, which symbolizes or indicates the output or the growth of the economy. So fundamentally, what we do when we say fundamental analysis at Potential Miners International is to look at the standpoint of the interest rate as of the day of analysis. Then we'll look at the event expected for the week. Do we have any expectation of decision changes when it comes to interest rate? And that is what we do in our or during our fundamental analysis phase. So quickly, before we dive into the sentiment and the technical analysis, let's just overview the interest rate of the 8 major currencies of the world, starting from the Australian dollar, which maintained 4.10% or percent for the interest rate, which means the interest rate predominant for Australian dollar or Australia as a country or economy is 4.10, followed by that of Great British Pound, which stood at 3.75, followed by the United States, which also maintained the same interest rate of 3.75%. Then that of the Canadian dollar and the New Zealand dollar maintained 2.25% interest rate, and of course followed by the euro, which maintained 2.15% interest rate, and Japanese yen is still maintaining 0.75% interest rate. And of course, the last economy or currency is the Swiss franc with interest rate of 0.00. This is very important for you to start your analysis with, because forex market is a game of interest rate. I cannot overemphasize this. If you are trading the forex market, and the standpoint of the interest rate of currencies or assets, depending on what you are looking at, is not your concern, you might really be getting a lot of things wrong in the market. So it is very important for you to look at the interest rate. And the most important aspect of this overview of the interest rate is to ensure that when you are picking your pair of currencies, you want to compare currencies with a very wide or clearly wide divergence when it comes to differences in the interest rate. So from the standpoint of the overview of the interest rate, we know that if we have a stable global market overview, then carry trade can take the front line when it comes to the movement of capital across different currencies, and that will be determined or influenced by the level of divergence in the interest rate, which means you have to pair the highest or countries with or currency with the highest interest rate, you pair it with other currencies with a relatively low or lower interest rate, and that is what is expected. And having said that, the next thing we do is to look at, for the week, are we expecting any news event or release of any data that can shift the standpoint of the overview of interest rate that we have just done? And today being Tuesday, 24th of March 2026, what we are expecting for today later, okay, I think we have seen all the important data sets for today. So tomorrow we are expecting inflation data for Australian dollar, and that is going to be coming up 1:30 a.m. tomorrow morning. And of course, inflation rates, as much as is important, is not going to directly shift the interest rate standpoint. So we'll just follow this up, and we'll now look at how the policymakers respond to whatever inflation rate data that is being released. And that is just by the way. So tomorrow also by 8 a.m. we are looking at the inflation data, consumer price index year on year for growth, GBP, Great British Pound, and that is also important. Of course, you are just to take note of this event, and so that you will not probably stand in front of a moving train. It's very important. Then Thursday, the next data that might be of importance to our analysis is the unemployment claim. And of course, like I said, you are not to trade this news event, you just want to follow them. Then you will now look at how the policymakers respond to changes in each of these important data sets. And on Friday, we are expecting retail sales. This is not really going to shift the expected trajectory of interest rates for Great British Pound looking forward. But then, based on the importance of or impact of event is also of high impact. So for this week, we are not really expecting too much of a policy decision data set. So it means what we have as regard the interest rate of these 8 major currencies, we can still use it to project our analysis for each of the currency pair of interest. Don't forget that the phase of our analysis include the sentiment and the technical phase of the analysis, and this is what we call an holistic analysis of the forex market. So this fundamental analysis is just the starting point. We want to know that if the sentiment is stable and there is no shift in sentiment based on any unexpected geopolitical or regional conflict or any policy overlay, as it were, that can shift the sentiment of players in the market, then the fundamental, represented by the interest rate can take the lead as the influence or the determining factor of capital flow in the forex market. So be that as it may, we have been able to look at the fundamental standpoint of each of the currencies of concern to us at Potential Miners International. So let's dive straight into what we have for the sentiment overview. And this is very important. It's very important that when you are analyzing your currency or your asset, you want to know what is happening on the sentiment standpoint globally. Now is very important. Globally, what do we have when we say, or what are we saying when we say sentiment analysis? We want to know what is the risk overview of the global market. Investors, what are they looking at? What are they looking at? What are they afraid of? What are they responding to? That is what we mean by sentiment analysis. And at Potential Miners International, we have been able to come up with 5 different indices that we use to gauge the standpoint of the sentiment at the global level in the forex market. And the first one is what we call the S&P 500 index. This is very important, and what we do is we want to ensure that when the index is giving us a predominantly bullish structure, is showing us that there is a level of stability in the market, and investors, they are not panicking. There is no level of fear. But when we have the S&P 500 index, especially on the daily time frame, giving us a predominantly bearish structure, which means you are having lower low, lower high, and is below the cloud, most importantly, is signaling that there is a level of fear in the market, and that fear is now reflecting in the approach of the investors towards moving their capital into asset that can generate high yield for them. So as of today, 24th of March 2026, based on the S&P 500 index, it's obvious that there is a level of fear in the global market. And this is the start point or starting point of our sentiment analysis, S&P 500 index. And of course, like our usual practice, we want to back this up with other indices, including the Dow Jones Industrial Average. We want to look at what is happening to the Dow Jones Industrial Average. Some people call this US 30. And it's very important that if we capture the index of the 30 tech industry in the United States, what is the overview of the behavior of the investors towards each of these or these stocks combined. So we can see that the Dow Jones Industrial Average is still showing us a bearish structure on the daily, and the indices are below the cloud. This is also signaling a level of fear in the market, and is now going to buttress what we have when we are to conclude what the overview or the overall sentiment overview or sentiment standpoint of the market is at the end of our evaluation of the 5 indices that we are talking about. The next index that we look at is the Nasdaq Composite Index, and of course, most times this is the first index that will tell us if there is a level of fear in the market, because it's captured over 3,000 firms or companies, and this index will tell us if, just like we have it for the S&P 500 and the Dow Jones Industrial Average that captured 30 firms, when you combine over 3,000 firms, the overview of the investment standpoint is still reflecting a level of stability or a level of fear. If there is a level of fear, you will notice that you will have a predominantly bearish market structure on the daily, most especially. So we can say that based on the stock market indices, the 3 indices that we gauge, we can say that there is a level of fear in the market. And of course, this is expected because of the current Middle East crisis, and this is still ongoing. And we are hoping that this will come to an end maybe in the next 2 weeks or thereabouts, so that we can have a stable global market. But as of today, there is still a level of fear in the mind of an average investors, and this is reflecting in the index or indices of the stock market as captured by the S&P 500, the Dow Jones Industrial Average, which captured 30 companies, and the Nasdaq Composite Index that captured over 3,000 companies in the United States. So this is very crucial. So before we leave the sentiment analysis or come to a conclusion, we want to also look at, if there is a level of fear, what is the measure of this fear? Then what is the trajectory of this fear? Is it increasing or is it decreasing? if it's declining, we will now know, okay, maybe this is what is happening. There used to be fear, but that fear is now dissipating over time. Then we can expect that we are going to transition into risk on sentiment. But that being said, we cannot conclude on that until we look at the VIX, the volatility of the S&P 500, and that is what we have here. You will notice that this VIX is standing at 26.75, which means that there used to be fear. The fear rose to about 35.30. It came down. Now the fear is still increasing gradually and is currently at 26.78. So based on the fear index, we can conclude that the fear is still increasing, although it's increasing gradually. It's hovering between 26.74 and 27.86. So the next thing we look at is the DXY, which is the measure of whether dollar is gaining strength or not. Don't forget that dollar is the king of the market, so you want to look at what is the standpoint of dollar, and this is going to really depict to what extent or where the capital will be flowing into, whether we have risk on or risk off. This is very important. So we can see that there is still a level of strength in the dollar. So dollar is still ruling the market to a reasonable level, given the fact that we have a bullish market structure on the daily, and the price is trading, the index is trading above the class. So we can say that there is a level of confidence in the dollar, and of course that means that capital will be flowing into dollar predominantly, given the fact that we have a tone of risk off in the market. So in conclusion, what do we have for the overall sentiment overview of the market? We can say that as of today, 24th of March 2026, the risk sentiment overview of the market is a pure risk off. Let me say that again. Having considered all our 5 indices, we can conclude that today, 24th of March 2026, the overview of the risk sentiment of the market is a risk off. This is very important because what the market will do will be dependent on the overall risk sentiment of the market, and it's very crucial that you overview this before you can now dive into your technical analysis to now begin to look for trading opportunities. So the essence of the fundamental and the sentiment analysis is to be able to choose assets that we are to trade. And having gone through the analysis, you will know what is the predominant flow of capital between this currency pair or over this particular asset. Is very important. So having said all of this, we have concluded that the overview of the risk sentiment is risk off, which means predominantly capital will be flowing away from assets or currencies with high yield, and is going to be flowing into currencies with low yield that we usually call the safe haven. It's very important. It now depends on the tone of the market in terms of what the investors are looking at, which of this particular safe haven is at the point of correction. Because a lot of time, even when there is a risk off, you will notice that it's possible that capital will not be flowing into a particular safe haven, maybe because that particular safe haven is at the point where maybe investors, they are thinking that maybe that particular asset has been overbought or oversold depending on the dimension of the risk. So it might not be flowing into that. So you want to really pay close attention, and you get to know or understand what I'm saying when we begin to pick each of these assets and we begin to overview based on the conclusion of the sentiment overview where capital will be flowing into and what are we expecting for each of the assets. So without wasting much of our time today, we want to quickly now dive into picking 2 or 3 assets pair. Then we'll now overview it together to say what are we expecting for this week. So the first asset we want to analyze is the gold. The first asset we want to analyze is the gold. Then you need to remind yourself, what is the overview or conclusion of our sentiment analysis? The conclusion is that currently, on a global scale, we are in a risk of sentiment overview. And that means that risk off is pushing capital away from high yield currencies. Especially, it is expected that there will be a push into safe haven. Now we now have different safe haven. We have commodity safe haven, we have currency safe haven. So when you now begin to pair these currencies, you will now know, okay, which one is drawing more of the capital. Gold, as it were, is paired against the United States dollar. Now we have gold paired against the United States dollar. Now dollar is gaining strength. So despite the fact that we are in a risk off, we notice that bulk of the capital is flowing into the United States dollars instead of gold. And that is why you saw that there is a selling trajectory on gold. So risk off means that dollar has a level of strength, that investors, they have a level of confidence in the dollar. Because if investors do not have a level of confidence in the dollar, it should be that we have risk of dollar aversion sentiment. I've said this over and over. If you are listening to me for the first time, maybe I should reiterate it. We have four major sentiment overview. The first one is a risk on. The second one is a risk off, which is what we have at the moment. The third one is risk on dollar aversion, and the fourth one is risk of dollar aversion. Now that it is obvious that the king of the market, which is the dollar, is gaining strength, a lot of investors they prefer to save their money in dollar form other than saving it in gold. So you will notice that there is, and currently there is what I tag as profit taking horizon or profit taking zone. So at the moment, gold is at a profit taking zone. So a lot of investors, they decided to take their profit in gold after gold maintained like 7 months of a bullish movement. You can see since August 2025, gold has been buying. August, September, October, November, December, January, February. Can you imagine? So this gold is currently at a profit taking zone. That is why you notice a corrective movement on the monthly. And because we now have dollar gaining a lot of strength, investors, they now predominantly push their fund into the United States dollar. So looking forward between now and next week into the coming week, you might be focusing on gold just to look for a sell. However, for Potential Miners International, we expect that some conditions will be met before we can sell any asset. And that is why we are taking our break on gold for now, because the directional bias is still showing a buy on the weekly. Meanwhile, the sentiment of the market is still telling us that we should expect a sell-off on gold. So for now, until gold is able to give us a break above this cloud, until gold comes to somewhere around this place, to say that gold move from here, break above to around 5,000, maybe 200, then we can now begin to expect a buy on gold. You see that now. This is very important. So on gold, we are not going to be positioning for any trade. This is because we don't want to trade against the predominant directional bias. Currently, gold is still showing a bi-directional bias, and we are not going to be trading against that. However, we are not going to be we are not going to be selling either. Presently, gold is selling, and of course, the sell can still continue as long as investors keep pumping their money to save as United States dollars, given the fact that we have a risk of sentiment at the moment. So investors, they will still keep pumping their money into United States dollars to save it, or pump it into Japanese yen. You know, these are the two assets that will predominantly draw capital during a risk off. If it's not going into United States dollars, it will be going into Japanese yen. You know, then Swiss franc, there is a level of drawing that Swiss francs also can take, because it's the safe haven, and these are the assets that will gain strength during this period of risk off. So until gold breaks above the cloud into around 5,200, we are not going to be taking any position on gold. However, if your strategy says you want to short trade gold, you should be looking for a sell on gold, because for now, investors, they are taking their profit, and we don't know for how long they will keep taking profit on gold. That's by the way. So let me quickly overview one or two more assets before we call it a day. Let's see BTC. And in fact, BTC might be the only trade that we will position for this week. You know, during a risk of sentiment, BTC is expected to be selling. This is because investors will panic, and they will be interested in pulling all their investment from any volatile asset or any asset that respond to global unexpectation or global event very quickly, and BTC is one of them. So BTC is on the sell-off. Currently is on the sell-off, and the directional bias is a sell. On top of that, we now have a risk sentiment, a risk of sentiment overview. So plus or minus, all that things held constant, between now and next week, we are expecting BTC to fall. We are expecting BTC to fall into around 50,000 or 52,000, plus or minus. And we have been positioning on this trade since last week, and we expect that BTC will give us all our conditions, and we are going to position for it. Let me just give you a snapshot for people that are probably not on the Telegram channel. If you are to sell BTC, allow BTC to break this structure just like it's already breaking it. So BTC will do something like this. I want you to pay close attention. It will break this structure like this. It will correct itself a little bit, then it's going to fall. So between now and next week, we are expecting all other things held constant, that BTC to start with should fall into 65,000, plus or minus. We are expecting that between now and next week, all other things held constant, BTC should fall into 65,000. But wait for it to break this structure, let it give you a correction, then you can now move down to 65,000. That's what we are expecting on BTC, and this trade is, you know, has met quite a number of our trading conditions. The directional bias is defined. The orientation of the market is defined. On the monthly, you can see that we have a markdown, you know, on the monthly. Then we are expecting this trade, and the tide on the daily is still a sell. The market structure on the daily is a sell. On 4 hours, we are waiting for it. The tide is a sell. We are waiting for the market structure to give us a change of character to the downside, then a correction a bit into this zone of 70,000. Then we are expecting it to fall down or push down into 65,000. That is by the way of expectation. But if the remaining conditions are not met, we are not to jump into the trade. But if this trade break below this particular 70,000 and it correct itself and correct and come correct down back into this particular resistance zone, we expect this resistance zone to push it down to 65,000, among other things. Don't forget that the movement of BTC we are on the broader perspective, we are expecting it to fall down into 52,000 plus or minus 52,000 or thereabout. That's what we are expecting on BTC. The next asset that we, okay, let's look at Euro USD. And this is very crucial because currently we notice that dollar is gaining strength and we have a risk of sentiment. That means that plus or minus a lot of capital will be flowing into dollar, as a safe haven. Not even because the interest rate of dollar as compared to euro is very wide. Dollar currently maintain interest rate of 3.75, while euro maintain 2.15. So the divergence is clearly there. So, but apart from the divergence in terms of interest rate, the current risk sentiment of the market is risk off. So, and dollar is gaining strength, which means investors, they will prefer to save their capital in form of dollar as a safe haven until the issue around the Middle East in terms of the war between USA and Iran, settles down. That people will now begin to push their capital back into high yield commodities or currency pairs. So expectedly, what we are looking at on Euro USD is that on the weekly there should be a very massive fall of Euro USD into somewhere around 1.100 or thereabout. Then we can now position for a sell-off on Euro USD. Other things held constant. But currently, the directional bias is still a buy. What this means is that we should stay put, let the market decide whether it's going to sell off in terms of whether dollar will keep gaining strength. And it means that we might not be able to enter any trade on Euro USD for the week, because it might take maybe a week or 2 or 3 for dollar to fall down to this wing before we now have a clear directional bias in favor of the strength in the dollar as compared to the euro. And the same thing play out for the GBP USD. On GBP USD, we are still expecting that the dollar will keep gaining strength and it will fall down to this side on the weekly before we now begin to look out for a movement to the downside on the overall. So that is by the way. So let me just quickly look at one more asset, then we can now call it a day. One more asset, AUD JPY. You will notice that I'm selecting this asset carefully, and this is because of the overview of the market that we have done during the sentiment analysis. AUD JPY is a very sensitive currency pair during a risk of market sentiment. This is because AUD is high yield commodity currencies, while JPY is a safe haven low yield currencies. So if there is a risk off in the market, capital will be flowing predominantly away from AUD, and capital is expected to be flowing predominantly into safe haven, including Japanese yen. So on AUD JPY, we are expecting a sell-off. However, you will notice that most of the time I mention it that when you are to start your technical analysis, the first thing you want to overview is the directional bias. The directional bias is the position of the price of a particular asset or currency pair when you view it on the weekly chart. I beg your pardon. So you want to look at what is the position of the trade or the price on the weekly and what is the structure on the weekly. You will see that the price is above the cloud. So on AUD JPY, as much as we notice that, or we have overview or evaluated that we have a risk of, AUD JPY is going to sell pretty small down to somewhere around there. Then if the war now subside or something comes up and they reach maybe a consensus and there was an end or there is an end to the war, you can now see AUDJPY bounce back to somewhere around here. So it means that for AUDJPY, because of the risk of sentiment, you will see a sell-off. You will see a sell-off, but take note that the only reason why you are selling AUDJPY is because of the risk of sentiment. If the war stops today, AUDJPY is going to pump to the upside. You see that. So if you are going to take a sell on AUDJPY, I want you to pay close attention to the happenings, around the war between United States and Iran is very important. That will be the only reason why the market will keep maintaining a risk of sentiment. Immediately you notice that there's going to be maybe a consensus or an agreement or a ceasefire, in terms of the war, you will notice that AUDJPY will begin to pump to the upside because the predominant directional bias is still a buy. I want you to take note of that. And this is how we view the market at Potential Miners International. We don't want to just open the chart and begin to buy or sell because we feel like doing so. We want an average trader to observe the market from a professional global standpoint. It's very important because very soon we are believing that most of us, we are going to be trading in millions of dollars. And if you are trading millions of dollars, you don't just want to get to the chart and be looking at red candle that is going down, green candle that is going up, and be pumping your money into something like that. You need to overview what is happening from the global standpoint, what is happening from the geopolitical standpoint, the fundamental standpoint of different economies. Then you want to now look at the technical overview to trade behind the market makers. So for you to trade behind the market maker, you must observe what is the directional bias. And that is why we take our time to come up with a very robust technical analysis that will show you the directional bias, that will show you the market orientation, that will show you the structure and the tide of the market, that will show you different things before you now position for a buy or a sell in the market. And this is what we are preaching. We want people to begin to approach the forex market from a professional global standpoint, and that is our major drive at Potential Miners International. So this is where we are going to draw the curtain today. I remain Mr. Akimbode, the king of waves. See you next time. God bless you.